I never know what markets are going to do. I know what markets are going to do over a long period of time. They're going to go up. But in terms of what's going to happen in a day or a week or a month or a year even, I've never felt that I knew it, and I've never felt it was important. We're almost always a buyer of stocks, and we're a more aggressive buyer when they're going down. I mean, I feel much better when they're going down. I think every business should be run as efficiently as possible, and some are and some aren't. We try to buy the ones that are. I mean, I bought my first stock in April of 1942. I was 11. Pearl Harbor had happened 3 or 4 months earlier. We were losing the war. I mean, if you want to talk about a bad outlook for the country's not going to go away. The plants aren't going to go away. The people aren't going to go away. The talents aren't going to go away. The country will grow in value over time. Now, who gets it is another question. But
hey there, folks. Welcome back to Invest Avenue. Today, we're diving into the timeless investment wisdom shared by the legendary Warren Buffett. He's a living proof that investing isn't about rocket science or trying to predict every market move. Instead, it's about having a solid strategy and a long-term perspective.
when I always ask the managements of our subsidiaries as well as any new investment, I want to know what their nightmare is. I would say that, and I think I speak for Charlie, I'll let him do it, but we really don't worry. We will do the best we can, and when we have capital allocated, sometimes it's very easy to do, sometimes it's almost impossible to do, but we're not going to worry about it because the world changes, and if we had something we were worried about in the business, we would correct it. I'm not worried about anything. I'm not really worried about we can lose $1 billion on a California earthquake, but I'm not worried about it. Although I have a sister who's in the audience that lives in California. I've told her to call me quickly if the dogs start running in circles or anything like that. But there's if you're worried about something, the thing to do is get it corrected and get back to sleep. And I can't think of anything I'm worried about at Berkshire. That doesn't mean that I have any good ideas as to what we should be doing with a whole lot of money that we have around. But I can't do anything about that except keep looking for things that I might understand and do something with the money. And if they aren't there, they aren't there, and we'll see what happens tomorrow and next week and next month and next year. Charlie, what are you worried about?
Well, in the 30-some years I've been watching you, I would say what it takes to make you not sleep at night is an illness in the family. Short of that, Warren likes the game, I like the game, and even in the periods that look tough to other people, it's a lot of fun.
It's a lot of fun.
It's a lot of fun.
Staying cool in tough times. Imagine going back to 1942 when the world was in turmoil due to war. Even in such uncertain times, Warren Buffett shows us the power of believing in the American system. He invested $10,000 in an index fund equivalent to the S&P 500, a bet on the resilience of the U.S. economy. The magic of compound interest. Fast forward to today. That $10,000 investment, left untouched, would have grown to a whopping $51 million. This incredible growth is a result of compound interest, the eighth wonder of the world, according to Buffett.
You literally every day have thousands of the major American corporations offered to you at a price that changes daily. And you don't have to make any decisions. You have to make, nothing is forced upon you. So there are no called strikes in the business. The pitcher just stands there and throws balls at you. And if you're playing real baseball and it's between the knees and the shoulders, you either swing or you get a strike called on you. If you get too many called on you, you're out. In the securities business, you sit there and they throw U.S. Steel at 25 and they throw General Motors at 68, and you don't have to swing at any of them. They may be wonderful pitches to swing at, but if you don't know enough, you don't have to swing. And you can sit there and watch thousands of pitches, and finally you get one right there where you want it, something that you understand, and then you swing. And
so you might not swing for 6 months.
You might not swing for 2 years.
Isn't that boring?
It would bore most people, and certainly boredom is a problem with most professional money managers. If they try to sit out an inning or two, not only do they get somewhat antsy, but their clients start yelling, "Swing, you bum," from the stands, and that's very tough for people to do.
Ignore the noise, focus on fundamentals. Buffett's advice highlights that successful investing isn't about making quick moves based on headlines or predictions. It's about investing in businesses that you believe will thrive over time. You don't need to be a stock market expert or time the market perfectly. Stocks versus nonproductive assets. Buffett's wisdom contrasts investing in productive assets like stocks with nonproductive assets like gold. While gold might feel secure, it doesn't generate any value over time. On the other hand, stocks represent ownership in businesses that innovate, grow, and deliver returns. Consistency trumps timing. Buffett's success doesn't come from trying to time the market, but from being consistent and patient. He points out that jumping in and out of stocks or making hasty decisions based on emotions rarely leads to sustainable gains. Long-term strategy is the key. Buffett's advice boils down to having a clear long-term strategy. Invest in a diversified portfolio of businesses that you believe in and let them do the heavy lifting over time. No need to obsess over market fluctuations or short-term trends. So, there you have it, fellow investors. Warren Buffett's investment philosophy isn't about complex strategies or predicting market movements. It's about having faith in the strength of the American economy, the power of compound interest, and a steadfast commitment to a long-term investment strategy. Thanks for tuning in to Invest Avenue. Remember to like, subscribe, and hit that notification bell for more insightful investment content. Happy investing!